All right, welcome back to what is a special in-between episode of the Property Now podcast, brought to you by Coposit. We all know we had an interest rate cut recently, so I'm here with Chris Ferris, the CEO of Coposit, and we're just going to have a candid chat all about what that means for the market, what that means in general. Chris might even give a prediction. We'll see what happens. I'm Michael Carboni. My friends call me Carbs, and let's get on to the show.
What do you want to talk about today, man?
Mate, I think we have to talk about rate cuts. Are we recording, Peach? I think we have to talk about rate cuts.
Rate cuts.
The rate cut.
Feels not long ago we were talking about 13 rate rises. Now we're talking about 2 rate cuts.
The year of drops, the year of cuts. It was the cut that everyone expected.
You reckon everyone expected it?
Well, did you expect it?
Look, there was people out there calling for 50-point cut.
There was a lot calling for 50-point cuts.
I mean, what did you think? Do you think it shouldn't?
I thought it was going to drop. No. Well, I thought it was going to drop because that's what the market.
The banks are predicting it. The markets were saying it. Yep.
I didn't know if it was going to be 0.25 or 0.5. We do know now that it's been 0.5. 0.25.
0.25.
Edit it, Peach. 0.25, which means the market is heading.
We've had 2 cuts now. We're at 3.85 as opposed to where we were a couple of months ago at 4.35%. So
the statements from RBA though have been they're not once again they're not and I think this is a good thing. They're not prepared to say yep we're heading back down or we're pulling back up. It could go either way based on the data.
And look, the markets are saying another thing. The markets are still predicting another 2 to 3 rate cuts from here. They're sitting at, as we speak as today, about 3.2%. So we should be expecting a few more cuts from here.
When you say the market, what do you mean? What do you mean? Who's the market?
Yeah, so you can trade on the futures of what it could look like. So you can see where rates are going to be or what they think the market is going to be. So you can actually see traders at the moment are thinking that it's going to be around that 3.2 towards the end of the year. So looking at that, you would suggest that there's going to be another 2 to 3 rate cuts. That can change with new data that comes in week to week, day to day with some of this data. But that's what it's meaning at the moment. But back to that rate statement that you talked on. Yeah, it was definitely discussions about inflation being tapered. The word uncertain was mentioned quite a few times. So it's definitely, the outlook has become very uncertain.
And I think that's because of, there's global uncertainty.
Yep.
And I heard something this morning about how these Trump tariffs will work in favour of further rate declines as well.
Look, there's some thoughts out there that the tariffs will reduce global economic activity, which means that will have a future impact on employment and inflation. So i.e. employment rates should increase because the uncertainty in the economic slowdown globally will mean less people hiring. But specifically, I think they're looking at inflation as the key number, and it's within that target range of 2 to 3%, which gave them the basis for a rate cut at the last meeting of 25 points. But I think that's where they're looking at is the key number is they believe inflation is under control. Actually, I love talking about the price of fuel. This morning, I even was driving in. I saw it for $1.50. Right?
Did you fill up?
I didn't.
Yeah,
I
you should have filled up. $1.50?
$1.50.
Is that for what, E10 or is that for like...
No, that's a good question. Probably one of those budget places, but probably half water, half actual.
Yeah, that's all right. Water.
$1.50. But, that's a good indicator of where things are going from a cost perspective. Oil's tied into everything, as we know. But, yeah, it just shows where the view of inflation, where they're seeing it at the moment.
The jobs outlook is an interesting one.
It is interesting. The thoughts are that it's still a tight market in terms of the employment market. And the last data suggested that unemployment rate is still low compared to historic standards at 4.1%, I believe. And there was roughly 90,000 jobs created last month. Productivity, as we know, is still lower, but that wasn't a key economic measure they were looking at. It's primarily at inflation. But if you're looking at it purely on inflation, on employment data, you would think there's no basis to have a cut.
Yeah, exactly.
Because we're close to full employment.
It's interesting. The data's interesting because I feel like I always have my gut check data as well, right?
What's your gut say?
There's a lot of people on LinkedIn that are like open to work or have just been let go, and I'm seeing that a lot.
We're seeing that a lot in the job market, yeah.
So is that going to catch up to the data? Surely it will.
Potentially. I mean, they're saying they believe that the data from employment should increase based off some of the global economic slowdown that they think is coming, but they're not convinced that could lead to a mass unemployment or increase in the unemployment rate. So It's quite interesting to see. I mean, is there like a whole secondary market of jobs with the likes of Uber and doing different things? Is there a whole secondary market that people are working?
It's like Airbnb now. You know how they've got their services as well. It's not just places to stay anymore. They released that last week. Did you see this?
I did see that, yeah.
So like, again, it's that second job, the job market.
Have you used it yet?
I haven't used it, no. And I know that ATO is cracking down on side hustles this year. I heard that one as well too.
Yeah, I know. Like, don't worry about taxing all the huge companies. Just focus on the little side hustles.
The people that need a second job to survive, let's just make sure
seriously
they're paying their bit.
Talk about not like keeping up with the times, right? Like,
that could be a whole nother conversation.
Another side hustle.
So look, what does this actually mean though? Right? So we've had the second rate cut.
Yep.
Let's talk real estate. Like every agent you speak to is like, okay, sentiment's coming back, or a lot of decisions people were waiting until whether there was a rate cut or not. What's going to happen to the market here?
Look, I don't think we've seen a huge movement in the market already from the first rate cut, and I'm not anticipating we're going to see a massive increase from this rate cut. Yeah. What I do think is that people will see that the trajectory of interest rates is on the way down as opposed to coming up, and that builds confidence. Is it necessarily going to mean someone's going out and buying straight away?
Yeah.
No, I don't think so. Like a first home buyer, if they're borrowing 500 grand, increases their borrowing capacity by roughly 15 to 20K. So it's not a massive increase.
I got some figures here on borrowing capacity, right?
Let's go into that.
So if you're borrowing $500,000, it's about 13.6K.
Okay, all right.
Right. If you're borrowing 750, it's 20K or 20.5, sorry. If you're borrowing $1 million, it's 27K. And then as you go, 1.5 is like 40K.
Yep.
It's not crazy. But I think what happened with the last rate cut was people started to make inquiries again. They felt like, because for a long time rates were going up and up and up, and no one wanted to jump onto the property ladder, just to use the cliche. No one's jumping on when they don't know when the top is of the interest rates. But once they started coming down, people started asking questions again. I think there is a sentiment out there that, like you said at the start, like the banks are all predicting that there'll be rate. I saw one, I think it was NAB predicted there'll be a cut in every announcement for the rest of the year.
Yeah, that's interesting.
Which is crazy, to be honest with you.
It is interesting to see that.
I think there might be one more, right? And the reason I think that's why they didn't cut 0.5. I think if they cut 0.5 yesterday, that would have been a
big shock to the market.
But if they did, it would have been like, this is it. This is the cut, and just this is it for a while. But the fact that they cut 0.25 means they've got room for one more potentially. Yeah. They're keeping that, in their pocket.
Look, ultimately, a rate cut suggests that they believe there's a weakening economy.
Yeah.
So it's not necessarily great. I mean, I know people with a mortgage or people looking to get into the market might think it's a great thing, but ultimately it suggests it's a weak economy out there. Yeah. That there's a rate cut and they need to stimulate the economy. Yeah. I.e. put more money into the economy. Yeah. And so it's not an amazing outcome.
I wonder if it will put more money in. So some of the savings figures, right? So if you've got a $500,000 mortgage, you're saving about $80 a month, which is $960 per year. If you've got $750K mortgage, it's $120 a month. So it's about $1,500 a year almost. If you've got $1 million mortgage, it's $160 per month. So it's almost $2,000 per year in savings, and all the way up to 1.5, $240 a month. It's almost $3,000 a year in savings, 2,889.
So what are you doing with your $3,000?
Well, it's not 3. It's not quite 3. But it's 2.5.
Yeah.
But so what? It was funny because some data came out from CBA just last week.
Yep.
On the first rate cut, only 14% of people updated their rate. So people were choosing to pay more.
Why is that?
I have a theory.
I love it. Is this a conspiracy theory or is it a theory?
It's a theory. It's my gut data once again.
Yeah.
Not all the banks. I think only one of the big 4 banks immediately did change the rate.
Right.
Normally
it takes a couple of weeks.
What happened in the past was the banks would immediately change the repayment. But I think 3 of the big 4 banks, maybe 2. We'll need to double check this one page maybe. But the banks didn't actually update the payments. Right.
Right.
They felt that people would prefer.
To keep the minimum monthly repayment the same.
To keep the minimum monthly the same. So you would actually have to call the bank or get your broker to call the bank to say, hey, we'd like to change your payment. So I'm assuming that's if they're on principal and interest.
Correct,
that would mean principal and interest.
So that would mean they're paying less interest, but they're just paying more principal off, right?
Yeah. I just, again, gut data, I can't see, if it's 14% of people change their rate, 86% of people kept it.
Kept the same.
I don't think they would have kept it if they didn't know that they had to call and make the update. So I'd be interested to see what that data looks like moving forward.
Look, I wonder as well how many people it really affects. You know, you've got the figures are what, 32% of homeowners have a mortgage.
Yeah.
The balance, 32% don't have a mortgage. Yeah. The balance of you have a mortgage. So those people that don't have a mortgage, you know, they own their house outright.
Yeah.
So it's hurting the 68% that don't.
Yeah.
But what about those other groups that, you know, are renting?
Yeah.
What impact does it have? Because interest rates were going up crazily, which meant rents were going up.
And rents aren't going down.
And rents are not going to go down.
Because rates are going down.
So now you've got a double whammy for the people out there that are renting. You've got, so they're renting, rents are already elevated over the last few years, but now it's going to make it more difficult for them to get into the property market if they're not able to get in there at the moment.
Yeah, so what do they do? There's no relief for renters.
Well, I think they, as always, they look at their circumstances. If they can actually try and get into the market, what does that mean for them? Like, try and get into the market if you possibly can.
I think
to avoid getting. It comes to a point where, you know, if you're paying $600 a week in rent, that there's always that balance between, okay, what do I pay in rent per week versus what my mortgage repayments or the interest repayments only would be. Yeah. And as rates come down, if rent doesn't come down, the gap between what I would be paying in rent versus what I'd be paying on a mortgage come closer and closer together, to a point where everyone looks at that and goes, well, there's no point renting anymore.
There are some
cut my rent and go into home ownership.
There are some suburbs in Sydney, and that list is growing now, where the mortgage repayment is cheaper than the rent, slightly.
Yeah, that's really interesting.
Right? So that's going to be interesting.
Because that's going to now become more of a factor. And that would then lead into demand for property and push prices up, ultimately.
If people can borrow.
People can borrow.
Because, again, it depends on the value. Like, some of these areas, average house price
are high.
Might be 1.5, 1.6
Look,
mil.
I mean, in terms of, we've got to look at their circumstance, but you think if you can pay that rent, which would be equivalent to a mortgage, then there's chances that they'd be able to service somehow. You can look into that further. But I think it's really interesting to see those different segments and cohorts with interest rates declining. What does it do to the renters out there? The people that own a property, the people that own with a mortgage, the people that own a property without a mortgage, and then the baby boomers who are sitting on mountains of gold. You know?
Don't single them out.
Well, it's not us that are sitting on mountains of cash in the banks, right?
Did you see Chris Kohler's video on TikTok recently? I love his stuff, and I'm always fascinated when people comment and they say, you're on Channel 9. I didn't even realise, because he's just so big on TikTok and Instagram. But he did one of his videos, and it was the bank saying, oh, hey, we just cut interest rates. And the mortgage brokers, the mortgagee is like, oh, great. Have you got any food? Because
he's paid it all at rent.
The banks are like, yeah, can we actually stimulate the housing market? But really, like, people are struggling out there.
That's the thing in terms of what does the rate cut mean for property? Talking on that, like, I think one hugely massive element that's different to other periods of interest rates declining is that cost of living has skyrocketed and it's not coming down. The only thing that I can see coming down is price of petrol, for example, filling up at the Bowser. Yeah. But things like groceries, insurance, electricity costs, like these are still going up.
Electricity definitely, because I think the rebates or whatever the hell, that's all going to be gone. That's probably...
if you drive, you got toll roads. I know you get rebates for that, but some of the tolls are just ridiculous.
Again, that's another conversation. We'll have a toll conversation one day.
But like, cost of living is increased substantially and it hasn't come down.
Look, for me, I'll be real. I'm saving $50 a week on my mortgage right now because of this cut.
Yeah.
But really, that $50 probably has to go into groceries and things like that as well. Yeah. Because everything has gone up. So it's
not into savings.
Is it really? Well, I'd like to save a bit, but you know, it's hard. It's still hard, I think. So we probably, you know, despite what it means for the economically, if rates go down, it would probably help out my household if it went down one or two more times. Then I could start to save.
Well, look, I do think based off what the data we have today and the trajectory we're seeing, we are looking at another 2 to 3 rate cuts from here. That's not a prediction. That's just.
I was about to say you don't often predict.
That's not a prediction. That's just based off the statement, the RBA statement that we've seen
this year. You say from here this year?
Yeah, I think that's what we're seeing. All 4 banks are predicting that to happen as well.
Because to be clear, it's not high. 3.85 is not a high. Rate.
I don't. By historical standards, no. I don't think that's high at all.
Yeah. I actually wonder how competitive the banks will get with each other now. Because I think on the back of the last interest rate, I was watching this one as well, and all the banks were tightening on their current their current book. They didn't want to lose any customers,
Yep.
right? So they were giving best rates to existing customers, but they weren't giving better rates to others. They wanted to keep their customers, right?
Yep.
I wonder now, as rates start to move, it's getting very competitive with the banks. Are the banks going to try and maybe do some deals
the
for new
cashback
customers?
offers and all that kind
Potentially,
of
I
stuff?
wonder.
Look like that
It's a
to
question.
try and win business.
We'll have to ask the sexiest voice, Jason He, if he thinks
He'll be
if that's a possibility.
The other part as well, the other flip side to all of this is on the developer front. What does this do for new housing supply?
Yeah.
Because we talk about prices and what that could mean for consumers, but I think really importantly for developers who had a really tough time in the last 5 years.
Yeah.
Or if you ask some developers, the whole time is tough. But particularly in the last 3 to 5 years, they've had a real tough time with additional borrowing costs, construction costs going through the roof, probably still continue to rise.
Well, this doesn't change construction costs.
It doesn't change construction costs, but it does change one element in the feasibility, which is borrowing costs.
Yep.
Not substantially,
Yeah.
but it definitely can change. And if there's more rate cuts to come, that might help, bring on new housing supply, which can help. And I think if there's more demand from market because they've got, if a customer can borrow more and they want to actually purchase now, that they see that they have financial capacity, they can purchase.
Interesting question. We should have probably asked this last week, our developer chat, which was fascinating to anyone that hasn't seen it yet. Go back and do that.
How important is...
Well, is the cash rate from a financier to a property developer the same, or is it different, or how's that?
No, it can
play
be
out?
different, yeah. There's definitely different risk profiles attached. It depends if you go to a bank or a non-bank lender, there's different rates.
But typically, would a rate cut affect the developer in that way?
Look, it wouldn't be the make or break between a project.
No.
If a rate cut is the make or break between a project, that project is not feasible.
So, but can your holding costs change as a developer? So if you've got, it can based on rates.
Look, again, depending on the structure of loan that you have
That's
in place, and depending if it's a bank or non-bank, it's typically tied to what they call BBSY, plus a particular margin. So that's just depending on what the structure of those loans are and if it's a bank or non-bank. I don't think it's going to move the needle massively for developers in terms of they've got huge amounts of money back into their feasibilities to get these projects started. But I think it could add to the demand side.
Yeah.
It could probably even clear out some of that secondhand stock that's sitting on market for a while.
Add to demand is interesting because it's not going to help supply. So if you add to demand and supply doesn't get helped, that could mean prices move.
Look, if you add enough to demand, it does help supply, but it's an issue because if you're adding a whole heap more to demand, that means more people want it. That would increase the price of whatever you're selling, and that therefore would increase supply. But I don't think that's a good outcome. Look, if we have just demand side policies, that means prices have to increase, which I don't know if that's the best outcome.
I don't know if there'll be enough demand for that. I'm hearing a lot of agents talk like that, but they're agents and that's how agents are meant to talk. So good on them. But I just can't see there being, I can see inquiries picking up, like people going, oh, hey, look, rate cut, maybe I can get in. Or maybe I can look at another investment. I can see questions being asked. I think a lot of people were waiting for this movement to start to ask questions again. And that'll keep happening.
Definitely. As
rates go down. But very interesting, mate. So you've already given your prediction. You reckon it's going down 2 or 3 more times?
I specifically said it wasn't a prediction. Have you got a prediction out there, mate?
I think we'll see. I think we're likely to see one more. I think the next one won't be any movement, which is July. I think it's June 9, sorry, is the next. June. No, July. 6 weeks. July 9. So I don't think we'll see movement there. It's hard to predict further than one out, but I do think they're keeping one cut up their sleeve for this year, pending one Donald Trump.
I do think there'll be a couple of cuts, and we just don't know what could happen. I mean, they talked about volatility in the markets, but then markets have pretty much, from a share market perspective, there was massive drops, close to 20% across most of the indexes. Now they're back nearly to all-time highs. They're about 5% off all-time highs.
But that always happens, right? It's always an all-time
It's been a sharp recovery, though, to be honest, compared to COVID, compared to GFC. It's been a much sharper recovery back to the all-time highs on the share market perspective. So the volatility is quite interesting to see. That maybe that volatility is already gone. So it could be interesting to see what happens with rates. I mean, if they had have not cut at the previous meeting, I think that it would have been shunned by market. But I think it would have also, there would be basis for that too. So I don't agree with the positions out there of 50 points cuts for the last cut. But whether it was neutral or a cut, I think was probably the right decision.
All right, let's come back in 6 weeks and have this convo again.
Mate, sounds good.
Love chatting with you on it, man.
By the way, is it true that you had someone from the show, a listener from the show, bump into you that called you Carbs, mate?
A lot of people call me Carbs. I get that a lot. It's fantastic.
So people are listening, mate. So
people are listening, and they know that my friends can call me Carbs. So that's fantastic. Speaking of, actually, the next episode, our guests on the next episode that's about to come out, because this is an in-betweener, first home buyers. So we've got a first home buyer episode next week. One of them purchased with Coposit. One of them purchased without Coposit. I'm not going to give away too much. They asked if they could call me Carbs. So
they are an amazing couple, by the way.
I would say, no offense to this conversation, but that was probably the best conversation that's ever happened in this room. So I can't wait to release that one. Paige, there might be a bit of a clip for that episode next week, but tune in and watch it.
Love it, mate.
Love it, man. Thanks.
Thank you.
I also think the stage of life we're newly married and then moving out into a town that we don't really have any connections. It was really lovely feeling like we were starting a new life together. And all the people we met, they didn't know us as Will and Naomi who got married. They just knew us as a married couple. And the way they talk to us and the way we interact with them, it felt like we were a unit.
I'm going to cry over here.
This is Jason He, the sexiest voice in property, here to tell you that the Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.